All right, folks, it is Tuesday, March 4th. Let's talk about what's going on. So we had another down day in the markets. NASDAQ tried to make a comeback, and it made pretty much of a comeback, but then it gave up the gains, but it, closed with fractional losses. The Dow was down, the S&P was down. I did some stock buying today in the tech sector. Also JP Morgan. The banks, that is an asset bonanza right now. Now let me say something, because if you've been following what's going on, you see that everybody is freaking out over the tariffs, and we're getting this avalanche of selling in the stock market. Anytime Trump mentions the tariffs went into effect today. You know the story. And by the way, just as a reminder, we had tariffs in 2018 and 2019, okay? And you saw what happened in the years after that, up until very recently. Market made new highs, and that was all on fiscal flows. I'm going to say something that maybe is going to surprise some of you. If you ask me what I think is going to happen, I'm going to say, I don't know. I need to wait. I need more information. Now, the reason why I'm saying that, let me move this a little closer to me. The reason why I'm saying that is because I see everybody's emotional reaction right now. As soon as Trump got installed in office, even before that, and he started talking about the tariffs, like every time he talked about the tariffs, the market went down. And when I observe that, when I look at that, to me, that is pure emotional trading. Nobody knows the big picture outcome of the tariffs. There are a lot of other moving parts that still haven't been figured out yet, that still haven't been put in place. You still have Congress working on a spending and tax bill. I don't even know if that's going to get done. We might have a government shutdown. Okay, and if it does get done, we don't know the magnitude of the spending cuts. We don't know the magnitude of the tax cuts. So it's like there's still a lot of pieces in this thing. But if I'm going to talk to you guys about the tariffs, I want to mention something that I have seen. And this is not just recently, but certainly over the last, 3 years, since the Fed started raising interest rates, and since the Fed started reducing its balance sheet, I have seen the so-called, very serious people, smart people, whatever you want to call them, all these, dudes they parade around on CNBC and Fox Business. They have all been wrong. Okay? And they all acted in concert. They all acted in concert with the rate hikes. Some of the biggest names on Wall Street, some of the highest paid analysts and people on Wall Street telling everybody to sell their stock. Little old me, I wasn't saying that, because I have an understanding of the way these things are going to impact the economy. And again, I'll just repeat that the stocks will follow the economy. I don't know what the impact of the tariffs are. And let me just explain something. For these people who are big, and this is a big group, folks. This is not just, these people on CNBC and Fox. This is the whole economic profession, academia. These are hedge fund people. These are big shots, all other big shot, banking people, whatever. A lot of this is based on the 1930s, which was, that's not an applicable comparison. In the 1930s, at least up until 1933, and before that, leading up to 1933, the entire industrialized world was on a gold standard. So the ability of fiscal to make an impact, to provide a safety net, to provide income flows and demand, it just wasn't there. It didn't exist. There was a gold standard constraint, which countries started to relinquished. They started to give it up starting in 1933. The United States was one of the last. So anyone who's drawing a parallel from the Smoot-Hawley tariffs, I think that's what's going on here. Like, and this is, I've said this so many times, like, it's very easy to get lulled into patterns that look similar where they're really not. Okay, this is the thing I have, like, with technical analysis and patterns on charts. I mean, they can fool you a lot because, oh, this is a Head and Shoulders, or this is this, or this is that. There could be subtle differences in the underlying whatever fundamentals, fiscal flows, policy, that even though that pattern is there, it's going to fool you. I think there was a book, Taleb, that guy, I forget his whole name. I think the guy's a clown, but he wrote a book, Fooled by Randomness, which is a great title. So, like, if everybody, including the entire economics profession, not me, they might be right, okay, with respect to the tariffs. I have to see all the other moving parts that are going to be put in place. I mean, I just can't. I'm not pulling the trigger right now because, well, I shouldn't say that. I'm actually buying into this dip. I'm picking up stock that is cheap, that are high quality, good companies, and I don't see any contraction whatsoever in the fiscal flows. Now, if I see that, and that's the core of my analysis, if I start to see that, and you will see that with the tariffs, because tariffs are a tax. So net government transfers, those tariffs will flow to the deposit side of the Treasury. That'll reduce net government transfers. That's my barometer. Like, I can see that like a scientist. I look every single day, boop, boop, I record the number, and I know what's going on. I'm not like running around willy-nilly guessing and saying, oh, in 1929 or whatever, the Smoot-Hawley tariffs, that caused the Great Depression. I've seen actual posts online right now saying, like, these tariffs are going to be like the next Great Depression. I don't know how anyone could make that statement. Like, if you make that statement, you're just leaving out so much understanding. I mean, you really are. Talk about single variable analysis. Talk about, this is just... Here's another thing that I find funny. I saw this today. That now the headlines are like, the tariffs are going to be terrible for the dollar. All right? People selling the dollar. I think the dollar index 106, something like that. In 2018 and 2019, the past two times when Trump applied tariffs, the dollar was shooting through the roof. And I could tell you that, I know, because I was short the dollar at that time and I got squeezed pretty bad. I managed to get out, but like, I took a little bit of a hit on that, I have to tell you. Now, if the tariffs were bearish for the dollar in 2018 and 2019, why are tariffs bullish for the dollar in 2025? The other thing the thing that I'm pointing out here, which is something that I pointed out to you guys many, many times in the past on my videos, is that when you see contradictions, for example, like what I just said with the dollar, when you see contradictions, it is clear evidence that people are just behaving on a belief, and there's no real analysis or understanding of what is going on. No really, looking at the true fundamentals of what's going on. You can't have a situation and say, if this occurs, then we're going to have this reaction. But if the same thing occurs a few years later, we're going to have the opposite reaction. This, to me, is very, very clear evidence that people are just making bets. They're positioning themselves based on pure emotion and what everybody else is doing. Now, getting back to the tariffs, I mean, they might be right that the tariffs are going to cause like a major economic contraction. I'm telling you guys that I don't know right now. I don't know how impactful. I don't know what Congress is going to come up with in terms of the spending and tax cuts and how much of an offset, if any, that is going to be. I don't know right now, how let's say China, well, we're seeing Mexico and Canada apply their own retaliatory tariffs. So everybody is freaking out about that too. The other thing is we just had Apple say they're going to invest $500 billion. We just had Taiwan Semiconductor saying they're going to invest $100 billion. Like, this is what Trump wanted to trigger. This is what he wanted to foster with the tariffs, to shift the net spender from the U.S. government to the foreign sector. Make the foreign sector be the net spender. And now we're already getting evidence of that with the $500 billion. Well, Apple's not the foreign sector, but domestic, non-residential fixed investment, foreign sector investment, they become the net spender. And that could carry for a good long time. So even if the fiscal flows, even if the net transfers start to slow down, I mean, if you start to see non-residential fixed domestic investment picking up because people are saying, oh, we got to do it here in the United States to avoid the tariffs, that's another thing. Like, nobody is considering any of these things. Not even the Atlanta Fed, as far as I can see, because today I looked at the components of its GDP now, and they said their forecast for the first quarter of this year was a negative 2.8% contraction in the economy. I looked at the components, and they had non-residential fixed investment going down. Maybe they're right, but I'm thinking, like, I see Apple saying $500 billion. I see Taiwan Semiconductor saying $100 billion. There's other companies too. And so, like, maybe it's not going to go down. Their model, for some reason, is expecting it. They could be right. I need to see. Okay? So, like, I don't jump on board. My framework hasn't led me wrong. It doesn't mean it's right on the instant, but it hasn't led me wrong. And I'm going to wait until things are more clear. Especially, I want to see what comes out of Congress. I mean, we might have a government shutdown in another week. I don't know. I mean, and yeah, that would be negative. But we might have a bill passed, and then I want to see, how that fleshes out. I want to see how that, break that down. Like, what are the spending cuts? What are the tax cuts? Need to know these things. You just can't be a hair trigger because everybody else is doing it and the media is blasting this. Oh, it's terrible. We're going to have the next Great Depression and the doomsday is coming. And it's ridiculous, folks. Then one more thing I'll talk about. This Ray Dalio. I mean, I've done so many videos on this guy. For as long as I've been following this guy, I don't really follow him, but for as long as I was aware of this guy, he's out in the media, he's been talking this debt doomsday bullshit about the debt and the deficits. And he says, like, we got to avoid, what did he call it? Oh, geez, I forget, but he gave it some real, crazy name, like an economic earthquake or an economic cataclysm. I don't know. I let this shit go out of my head because these people are crazy. And he said, we got to get the deficit down to 3%. First of all, it's at 3% right now. Okay? Last year it was like at 4.5%. The year before that in 2023, it was at 6.5%. Big deal. The economy was growing. The stock market went up. It was a fabulous time. And where does this 3% come from? Does he just, this is some arbitrary number that everybody, for some reason, 3% of GDP, 3% of GDP, we got to get the deficit down to 3. It's just some fucking arbitrary number that they pull out of their ass. It has no meaning whatsoever. Why 3%? Why not 2%? Why not 4%? Why not 0%? I mean, and these people they're passed off as, really smart people. Now, I know he's got money. And a lot of you think like, if somebody has money, they're a genius. And that's all there is to it, Mike. So you got no right to say anything against anybody who has money. Well, I'll tell you something. The guy with the most money, Musk, is the biggest fucking moron when it comes to economics that I have ever seen in my life. And I have been in this business for, holy shit, like 46 years. Okay? I know a thing or two. Yeah, I'm not worth 380 billion or for whatever it is, but I know some things, okay? He's a fucking idiot. So yeah, Dalio, 3%. And he, I've heard this number dragged. This number's been pulled out of asses like for years. We got to have a deficit at 3%. It is at 3% right now. Is that stopping the stock market from selling off? Is that stopping the contraction in the first quarter? I mean, where do they come from? Where are their brains? What the hell are they talking about? Based on what? Based on total fucking bullshit. It's crazy, man. So like, yeah, the Great Depression, because he's putting on some tariffs. Things are going to equilibrate, okay? It's like a still pool of water, a still pond of water that's been set up, and it's been that way for a long time, and Trump comes around, he throws a rock in it, there's a splash, there's ripples, there's waves, and then the water equilibrates again, and we have a new, the economy looks a little bit different. But I'm worried about, like, if you start taking income out, that's the thing. You might say, well, Mike, that's what tariffs are. The income flows to the government. Okay, but again, I want to see what Congress comes up with. I need the other pieces of the puzzle. And so far, the main thing that I look at is telling me this is 1,000% pure panic by people who have embraced some kind of belief that came from almost 100 years ago, 96 years ago, and they're applying it to today. And there's been no thought, no deep thought beyond that. Just like knee-jerk reflex reaction. And that's it. Anyway, that's it for me today. Please like and subscribe if you've already done that. Thank you. Some of you have saying congratulations on my 9,000 subscribers. I'm working towards 10,000. Took me a long time just to get here. And don't forget, sign up for a 30-day free trial to MMT Trader. I send out emails all day long. Insight, recommendations, MMT discussions, blah, blah, stuff like that. See you tomorrow. Bye.